The semiconductor sector was riding high on AI optimism, and it recently faced setbacks due to growing concerns about long-term demand outlook for semiconductors and weak Chinese demand. Further, the series of weak earnings from major AI players like Advanced Microservices and Supermicrocomputer was the latest blow, resulting in a sell-off in the broader sector last week. How can we interpret this down in the semiconductor stocks? What's the impact on semiconductor ETFs? Should we increase the semiconductor ETF portfolio? So if you are interested in semiconductor and AI ETFs stocks and their growth and future, then please watch the video until the end. Let's get started. Thank you again for joining me today. As always, everything shared in this video is for informational purposes only. But if you hit that like button below, that would be a huge contribution in the growth of this channel. AMD reduced guidance for 2024 sales for its newly released AI chip MI300, and this news pushed the stock down. Though the company raised its revenue target for this new chip MI300 to at least $4 billion from the earlier $3.5 billion. Analysts believe that easing supply chain restrictions would allow the company to increase its share in the AI chip market and potentially reap billions of dollars in revenues. Supermicrocomputer also plunged last week following its revenue miss amid concerns over the profitability of a new line of servers. However, analysts believe that AI is still in the early stages and will continue to grow. The performance of AMD and SCMI caused the disappointment, resulting in a decline in other semiconductor stocks like NVIDIA, which is at the forefront of AI innovations, which fell sharply by 6%. Chip makers like Micron Technology and Marvell Technology also went down. So how can we interpret this down in the semiconductor stock? What's the impact on semiconductor ETFs? Should we increase the semiconductor ETF portfolio? Let's take a look at some of the popular semiconductor ETFs and understand the impact. Let's check SMH. VanEck Vector Semiconductor ETF follows the MVIS US listed semiconductor 25 index and holds 26 stocks in its basket. It favors the largest companies in the industry. SMH ETF has managed asset worth over $18.3 billion and its expense ratio is 0.35%. When we check the ETF SOXX, it's from iShares. It's iShares Semiconductor ETF, which tracks the NYSE Semiconductor Index and holds 35 securities in its basket. It holds $12.6 billion in assets under management and expense ratio is 0.35%. When we look at the ETF SOXQ, which is Invesco PHLX Semiconductor ETF, it offers exposure to the largest US listed securities of companies engaged in the semiconductor business. It tracks the PHLX Semiconductor Sector Index, holding 33 stocks in its basket. It has $364 million assets under management and expense ratio is 0.28%. When we look at SHOC, Strive US Semiconductor ETF, it seeks broad market exposure to the US semiconductor sector. It holds 33 stocks in its basket. The Strive US Semiconductor ETF has $59 million assets under management and its expense ratio is 0.4%. When we look at the ETF FTXL, First Trust Nasdaq Semiconductor ETF, it offers exposure to the most liquid US semiconductor securities based on volatility, value, and growth by tracking the Nasdaq US Smart Semiconductor Index. ETF FTXL holds 33 stocks in the basket and its expense ratio is 0.6%. First Trust Nasdaq Semiconductor ETF has $1.4 billion assets under management. Looking at the above ETFs, why these ETFs would be a perfect buy right now? Let's check. ETFs are a basket of semiconductor stocks. It provides diversification and therefore it is the right time to increase the semiconductor ETF portfolio. Despite the slide, the outlook for the sector is promising. The semiconductor index is still clearly outpacing the broader market index on a year-to-year basis. This trend is likely to continue thanks to the rapid development of AI, which will continue to fuel a surge in demand for semiconductor products, driven by its applications in data processing, pattern recognition, and machine learning. According to a new report by Grandview Research, the global artificial intelligence market is expected to witness a growth of almost 37% to $812 billion by 2030. Semiconductors have been the most important drivers of the overall growth in technology given the use of chips in day-to-day life, from cars and electronic gadgets and many more. Demand will continue to get higher given increased digitization in various corners like healthcare, transport, financial systems, defense, agriculture, and retail. and many more. The rapid adoption of cutting-edge technology like cloud, Internet of Things, autonomous cars, gaming, wearables, VR headsets, drones, virtual reality devices, 5G, and other advanced information technologies should continue to fuel the AI and semiconductor growth. Based on the rating by various agencies, these 5 ETFs will outperform the broad market. Moreover, these products have exposure to a number of firms in various types of industries, suggesting that this can easily counter shocks from some of the industry's biggest components. Given the strong industry fundamentals and the diversification benefits of ETFs, investors may want to consider the recent slump a buying opportunity. If you found this information valuable, don't forget to like, share, and subscribe for more financial insights. Until next time, happy investing.